Hey folks, Dan Frio here, the rate update. Today in the news, we're going to talk about inflation. As usual, the Fed, the Russian-Ukraine war, supply chain issues, and more. And how does all this consolidate into what's going on with mortgage rates and where do we expect them to be today, tomorrow, in the next couple weeks or months? So that's what we're going to talk about today. So if you're new to the channel, please don't forget to subscribe down below, where our goal here is to educate and inform you guys everything real estate, especially when it comes to all your financing options. So let's get to it. Let's start it off by, let's go over my weekly newsletter that was posted just the other day. And then we're going to go with current events. Why I want you to show you the weekly newsletter, today's edition is explaining basically what has happened and what the Federal Reserve is doing to basically help push down inflation. And then we're going to go to the newsletter for today, which isn't really much there because there's no economic news today. I'm going to show you that in the economic calendar, and then we're going to get on to mortgage rates and how all this is affecting mortgage rates. So let's start our day out with the weekly newsletter, the daily newsletter, and then we're going to get on to current events and then mortgage rates. I'm going to caption this as fast as I can, but this is intriguing for you guys to understand what's going on. So back when the pandemic hit, basically the Fed stepped in and they basically said, we're going to help recover the economy or make it that the 2006-8 debacle doesn't repeat itself. So they came in and they started pushing down rates significantly lower because the world, not only the US, but the world shut down. Okay. So then the Fed was really aggressive in stimulating the economy, pushing down long-term rates. Okay, so they started buying mortgage-backed securities and other bonds. So that's what they did there. Then, inflation began to pick up due to supply chain issues and the resilience of the demand of consumers. Okay, so that's what we saw. But the Fed continued providing accommodations for several reasons, including uncertainty over COVID variants, an updated inflation framework that allowed for more inflation. The Fed came in and said, we're going to let inflation kind of run rampant for a while, but then it'll come back in place. Is that wrong or is that right? Well, only history will tell us that piece of it. And the mistaken assumption that inflation would calm down more readily than it has. But I'm still a proponent that it's going to come back in line fairly quick once we have a lot of supply chain issues put together. But that's my opinion. The Fed finally began to tighten policy in late 2021 and got incrementally tougher over the following months. And then the Ukraine war caused a quick head fake that initially helped rates, but is followed by a surge in inflation concerns that caused the Fed to significantly, even more aggressively tighten. So here's what we're seeing on the inflation front. This is core, okay? On a yearly basis, you can see a huge jump up there. But then when you break it down on a month to month, you can see there was a huge decline and then a huge spike, and then it's coming back down. Is this signs of a recovery? Okay, on inflation. Don't know, only time will tell. Here's the federal funds rate. This is the interest rate that the Federal Reserve controls, and they're expecting, basically, we were almost at virtually zero for years and years and years, and they're expected to push that up to 2.75. Well, it's freaking out a lot of people, but if you wanted to be freaked out, you should have been around in the 80s, and I'm going to show you that information here. Short-term rates, they don't dictate. Let me read this because this is very important, so a lot of people don't understand. Short-term rates, like the ones set by the Fed, don't dictate mortgage rates, but they are correlated. So basically, the Federal Reserve controls what's called the federal funds rate. When they move that rate, a quarter, a half, a whole percent or whatever, it isn't basically, they're not doing anything to any other mortgage rates other than the federal funds rate. But you can see here, there's a correlation that it has throughout the rest of the interest rates throughout the country. But look back here, what happened back in, this is 30-year mortgage rates. We had one of the biggest spikes that I've ever seen in my lifetime, and it's happened right here, but it also happened back in the 90s. So you can see it back here. Only one other time in history did mortgage rates jump so fast. So to the market report, there's a strong bond market open right now. One of the biggest reasons right now is Chinese lockdowns. So China is starting to lock down again because of concerns over COVID. How's that going to play a role in the economy throughout the US and the world? We are yet to see. We are seeing here that the Treasury yield slumped to start the week. because of a growing concerns of COVID in China again. All right, so that's what's going on. That's basically a backdrop of all that. So let's get current now. The current news today, Monday, nothing. But what we have throughout the week, let me just point out the things that should be useful for us and might be market movers. Durable goods orders, I don't really see that or the consumer confidence playing anything of a role in what markets are doing right now and the Fed. But new home sales are going to come out tomorrow. And what they expected to be coming in at 765,000, just a little shy from the month before. Pending home sales, the previous reading was -4. They're expecting them to come in at -1. Guys, this isn't saying that home prices are going down. It just says sales are starting to droop. Okay. And then we have crude oil inventories, which we know crude oil is a big piece of energy and a big piece of inflation. Okay. And then we have the GDP coming out and initial jobless claims on Thursday. So these 2 days here will be market movers, these events. Okay. So with all this being said, what's going on with mortgage rates? Well, we go into, this is the mortgage-backed security bond that we were talking initially that the Federal Reserve stepped in and started buying aggressively to push down rates. Well, today we're seeing a plus 42. That's a good number. Not sure why we're recovering that much today, but last week we got absolutely clobbered. So this might be some profit taking or just getting back to normal a little bit. But you can see that, and I'm going to dive into a lot of this stuff, the trends for today is significantly stronger. Not really sure why, because we just went through all the data and there's really nothing there that would say, mortgage rates should go much lower today. So that's that. So let's get over to where mortgage rates open for the day, and that's why you're here. Let me go through this cell right here and I'll explain to you how this all works. But just over here, just to explain to you how this really works, the MBS market, when this number goes up, it pushes the price of the bond up. In an inverse relationship, it causes mortgage rates to go down. So we like when this number is up versus the downs that we have seen basically every day for the past month or two. All right, so let's go over to that. How does all this correlate into mortgage rates for today? So let's go across this. This is rates published by Mortgage News Daily on a daily basis. And I publish this just because it's a good foundation or benchmark for us to use. So we go across here and this is saying, today's rate for the 30-year fixed rate is 5.39. It is up 0.01, nothing major. And it comes with a cost. But you can see, so let's break down this whole cell. The rate, 30-year fixed, is 5.39. It was 5.38 on Friday. It bumped up to 5.39 right now. It's coming with a cost, you can see right here, of 0.4. So how you figure out your cost is you take your loan amount times 0.4, hit the percent sign, and hit the equal sign. And that'll give you how much it would cost you to buy down your rate to that. You can see here also we are hitting 52-week highs basically across the board. So let's fly across these rates. 15-year fix is up 3 basis points, coming in at 4.82, comes in also with 0.4 in points, hitting its 52-week high there. We have the FHA/VA/USDA. All the government products are basically batched in right here. We'll say that on the Mortgage News Daily report. So they're coming in at 5%, no change and no points, but we're sticking at the 52-week high. 30-year jumbos up 3 basis points to 4.62. It is at its weekly 52-week high, no points here. And then we have the 5/1 ARM coming in up 5 basis points to 4.3, coming in with costs there as well to buy down that rate. And you can see that that hit a 52-week high. So unfortunately, if you go across the board here, every one of these sectors hit a 52-week high. Trend here is mortgage rates are much higher than we were for a long time. You can go back to the chart all the way across here. We haven't seen these rates this high in a long time, but the sentiment today right now is positive, which is good and should put a lid on how much rates are going to go up going forward. So hate to laugh, but it's been basically nuts. So that's it for the report today. I apologize it was so long, but if you want to find out more about me and my team and how we can provide you guys assistance if you're looking to buy a house, refinance a house, maybe do a reverse mortgage, a debt consolidation, or anything of that, please reach out to us. It's pretty simple. You can reach us up here, 844-775-5626. You can apply online, you can schedule a meeting, and we even have this chat button. And look who's up next. Me. So if you get on now, soon, quick, you might be talking to me live on the live chat. So God bless, guys. Thanks for watching. Sorry it was so long, but I'm trying to condense everything into to make sure you guys understand what's going on in real estate, especially with all their financing options. So thanks for watching. Give us a thumbs up if you like the video. Subscribe down below. Hit the bell every time I post video. You get an alert. I'll see you later this afternoon with the midday report.